Hello there, and welcome to another of our weekly webinars going through charts for the energy markets. I hope everybody's well and hope you can hear me okay. If you can't, then put something on the chat to say otherwise, but otherwise I'm going to assume you can hear me and we can crack on and do this thing. So for those of you familiar with what we do, we're just walking through the different time frame charts for the markets that we cover on our daily energy report. I had the link up. If anyone's watching this later on, this is open to clients and goes out live, if you like, to clients. But I will be trying my best to post this on my social media and a few other places later on, after the event, if you like. So on YouTube, which is a new thing I'm trying now to record it on YouTube. So some of you may be watching this later on, those who can't get Zoom, and those who aren't clients. So if you're not a client, why not? And have a trial and have a look, see what we're all about. Because what we're all about is looking at the charts and only charts for energy markets. I don't have a firm skew on the fundamentals. I purely look at price action. I've been doing that for about 15 years on various markets. One of the markets that I have been analysing for the longest is Brent crude oil. So that's where we'll start. Nice segue. Brent had a bad day on Monday. We sold off after a doji on Friday, which was just shy of the green line. That's the 200-day moving average, and I'm looking at the daily chart here. Friday's high 43.80, and then on Monday we sold off down to 40.96 and posted a red candle. When we see, one of the things I like to look at when I see a large bodied candle is what's called the Marabuzo line, which is the halfway point of the real body. And the reason I like to see that can be proved just by looking at this chart, because the Marabuzo line of Monday's red candle is 42.22, and yesterday's high is 42.20, and today's high is 42.15. If we now go to the intraday time frame charts, and we look at something like a 30-minute chart, you can also see that it was this blue line here coincided with that. That's the most actively traded price on Monday, because what we actually saw on Monday was a sell-off in European trade, and then a consolidation, then a sell-off late on when the US session came in. So the most actively traded price, the volume point of control with VPOC, if anyone's wondering what that means on the reports, is right there as well, 42.20. So that was why on yesterday's report and today's report, and I can bring this up to show you, for Brent crude, we had 42.20 to 23 highlighted as an important resistance, and that's proved to be so. It goes yesterday's high and today's high so far, being capped below there. What does that mean? Because that was a bear day and we've got a big resistance level there, the fact that we keep failing there does suggest that there may be more downside due for that one. And if we get back above there, then that takes away some of that pressure. But if we stay below 42.20 to 22, then I think we will have another go at 40.96, and then we could have a look after that at this low from mid-September at 39.30. That's what Brent crude looks like. And I'm actually going to include on these webinars from today a quick look at the WTI and the Henry Hub as well, just so we can please any of our cousins on the other side of the pond who want to look at these webinars as well. One thing we do know is that the Brent chart, sometimes, most of the time, not all the time, the Brent chart and the WTI chart look very similar. And yes, we've got this three-candle, arguably an even star pattern that straddled the weekend. And then Monday's big red candle had Marabuzo resistance at 40.36. Yesterday's high was 40.27. Today's high so far 40.15. So same sort of thing going on. We've got the green line there, the 200-day moving average. Everyone looks at it. I don't know why. I hate it, but people like it. and people reference it, but it's all coming in around the same levels. It's all saying 4020, 4035 is an area of resistance that we should be keeping an eye on. And if we can't get back above there, then there is downside risk. We have another look at 3887. And then this low here last week, 3616, 2 weeks ago, on the WTI, that low was bang on the 50% mark of the whole year's range. Okay, there's the high of the year right at the start, 65, 65, and then we got down to 650. Can you believe that move? Wow. Well, the halfway point of that whole move is 3607, and that's where we found buyers there, which was bullish news, but now the bears might be getting noisy again. I know that there's a few people out there who are on the fundamental side of things who are scratching their head a little bit as to what's going on with TTF UK Gas at the moment with respect to the recent rally and how strong it is. And we'll get on and look at those charts afterwards. But for now, let's look at the US side of things, the Henry Hub, the nat gas out of New York, Chicago, whatever you want to call it. That did see a significant rally recovery, if you like, through August, through most of August, which came after we got a head and shoulders bottom buy signal here on the 3rd of August. It took us all the way up to 2.743, and we've been selling off ever since to 1.795 on Monday. The last 2 candles yesterday and today so far, obviously today's not done yet, but both got a little bit of lower shadow going on. And if we look at the intraday chart and see what that actually translates to, it means there's a little bit of dip buying going on. It doesn't look too significant on there at the moment. And what I've said on the report is I'm staying bearish because there's plenty of levels above in this one where we've got to retake before we can start thinking anything bullish. 1.946 is the first of these really right there. It was like the overnight low, and then on Monday. I'm so crap with dates. On Monday it was the overnight low just before day session trade kicked in, and day session trade was greeted with selling. Right, so that's US gas. Let's look at its UK counterpart, the NBP, and we're looking at the October contract here. And that has made new highs for this recovery move today. Monday was a shooting star, or even could call it a gravestone doji, which is generally a very bearish pattern. Whenever I see, or not generally, it is a very strong reversal pattern. Because that upper shadow on the chart, just like we saw back here on September the 4th, that long upper shadow says to us that the buyers came in and then the sellers returned and we closed near the lows. We can quite often see these at market tops, and we're seeing a few of them. So that's what I've said on the reports. We're showing signs of tiredness in this rally at these sort of levels. But yesterday proved that it's going to take a bit of doing to turn this around, because we rallied really strongly. We held the trend support line. That's why we put these lines on the chart, to reference them, to say, all right, we're still in an uptrend unless we break that line. That line's at 29.85 today. Yesterday's low was 28.74. That gives us a 29.74. Sorry. So, and the trend line is at 29.85. So there's a strong area of support. Unless we break that, I'm not too interested in the idea of batting against this trend. This 34.61 line, if we were to change this to a weekly time frame, we would see that that is the 38.2 retrace of the entire sell-off we saw in the, this is on the October only chart. So this is, this looks fine, this data, but on a weekly, but on a daily, it looked pretty scratchy, but the high was 62.39 there, and the low there in July was 17.44. So yeah, that's our retrace target, 34.61. Might be interesting to see what happens as and when we get to there in that one. Right, if we're talking about gas, let's look at let's switch over to Montel, which is where I get my my OTC and what's the exchange, the ICE index charts from. ICE index, TTF, natural gas, with the out of Rotterdam, same sort of thing. We had a red candle on Monday, isn't it? Monday. After an early failure at 11.93.5, we got down to 11.36.5. We opened yesterday at 11.20, so we had a gap to fill up to that Monday's low at 11.36.5. And if we look at the 30-minute chart, you might be able to see that better. We filled that gap originally and then fell off, and then we came back. And once we got above that high there at 11.45, which was the morning high, in late trade yesterday, boom, we saw quite a significant rally into the close, which left us with a nice big green candle. Put a Marabouzo line on that. It gives us something, I think, well, let's have a look. We put it on the report today. TTF, where's my road there? Dutch TTF. The Marabouzo line's at 11.45 and the 11.48. 11.45 was the breakout level. It's quite nice. I like that kind of thing when you've got a level from two different places, but telling you it's the same level, and to keep an eye on that area. So yeah, pretty happy with that, pretty bullish. We've seen a very muted day so far, not too much going on. All we've seen is another failure at 11.93.5. So that's a bullish looking chart. The trend line that we have on that chart is somewhere down at 11.15, which pretty much coincides with yesterday's low at 11.12. So strong area of support there. And again, as I said in the on the UK chart, we've got these trend lines, they're moving up with the market. We can just reference them on a daily basis. So where's that trend line? Bullish above there. I'm not changing my skew. And that can help you and stop you from letting any silly, mad fundamental ideas of where things should be. And you just filter them out and say, I'm going to let the price tell me what's going on. Now, this is German power. While we're on Montel, we'll look at the German power chart, and we had a low there on when was it, 9th of September at 40.21, and that low is between this high here, 31st of August high 43.25, and this high here on the 5th of September at 43.25, exactly the same levels. So when we saw some weakness on Monday, I said, right, we really need to be keeping an eye. If we see further weakness, 40.21 is a key level, because if we break that, we get a double top sell signal. And if we get a double top sell signal, then you are talking about a target somewhere down here with a 37 handle. But what happened yesterday was 40.30 was the low. We rallied strongly. 41.00 is now Marabouzo support. And again, there was some intraday, I think there was some intraday price action going on around that level. Let's look at the 30-minute chart. That high there was 40.90. And that's where we broke out late on. This is the 30-minute chart, German power. So that's a nice area of support as well. 40.90 to 41.00, big level to watch today on German power, because we are seeing a bit of a pullback. So what did I say? I've got my list here. Right, we'll look at coal, shall we? Let's have a look at the coal chart. Coal, which, I don't know whether you agree with me on this one, but sometimes I think this leads a lot of the moves in other markets. We saw a bearish candle on Monday, which took us down to 57.65. And it's, but we've recovered a chunk of that since. Obviously, it's very thin trade. This is our 30-minute chart. And it's just, you can't get much from that if you're trying to look at the market the way I do. There's not a lot of candlestick work that can be done on that intraday chart, because it's just all dots and dashes. It doesn't trade enough. But people have, I've had multiple requests over the years to cover coal, so I do it, but I do it somewhat reluctantly, because I haven't got the intraday price action that I would like to be able to do a really good job of analysing. But anyway, I digress. We are recovering. We are staying in an uptrend. We're making higher highs and higher lows. And I think what we'll see in coal is we'll see in the coming days 59.00 taken out. Then we'll fill this gap to 59.54. Then we fill this gap to 60.65. Then we've got 61.40, which is the July high. And then we are back here, 62.10, 61.90, and 62.30. What's that right there? Sorry, 62.20 is a really big area. It's a big old 38.2% Fibonacci level. But if we go back to last December and January, and then again going into February. It was a really pivotal area, and I like levels like that. And that was the area I was flagging as important back in July. And then we got the 61.40 and fell over. That was not a big surprise because it's such a big resistance. So that is what coal looks like. We are going up. So finally, to the market that everybody seems to be very interested in right now, and the market that generally behaves pretty well when it comes to technicals. I say generally because I don't think it bloody well has over the last few days. It's been a bit of a pain in the backside. 2609 was that 9th of September low. And then we rallied, and on the 15th of September, we hit 3078. That was 2 ticks away from this high here at 3080. I've gone on and on and on about this. It's not a double top yet, blah, blah, blah. We have hit resistance, blah, blah, blah. If you look on the weekly and the monthly charts, this is a huge area of resistance, blah, blah, blah. We know all of that, okay? And if you are a subscriber and a client, you will know, we had some good, we put out a few decent charts last week, just before it dropped, to talk about upside targets that we could glean from Fibonacci. If anyone missed those, give me a shout and I'll send them back to you. But this is what the weekly chart looked like last week. It was something called a shooting star. Small wheel body, long upper shadow, upside rejection. That's what we were looking at on Friday and focusing on. Will we post one of those? The answer is yes. So will we see some confirming weakness this week? The answer is yes, until suddenly yesterday we saw quite a significant rally. It got back all of Monday's losses, and to be honest with you, did have me scratching my head a little bit this morning when I was or last night when I looked at where this one had finished. I went, cool, blimey, okay, how did that happen? And that wasn't really in the script, was it? It wasn't in the script. What we saw first thing this morning, right? This 2830 level was a vacuum here. The fact gives two failures here if we're looking now at this 30-minute chart. And see that black, not black, it's blue. See that blue that line on the sideways histogram? That says to us that 2840 is the most actively traded price over the last 20 days for EUA carbons. It's the composite high volume node, the CHVN. And what we saw first thing this morning was a rally to 2833, and then bang, instantly some responsive sellers, which straight away put me on the put this on the defensive as far as I was concerned, and made me think, okay, that's really interesting that we've seen that significant failure at that really significant, really important resistance, 2830, because what happens with these high volume nodes is they can turn support and resistance. And the fact that as we've seen a sharp spike higher that's failed almost bang on that level is significant for me and significant from a bear's point of view. Interestingly, 2700 is trying its best to take over as the high volume node, and that's exactly where we sit as I'm talking right now. And you can see that that pale blue line I've got on the 30-minute chart shows that this 2690, 2700 area has been pretty pivotal over the last 2 or 3 sessions. So yeah, what that says to us is we're probably coming off again. If we break 2695, 2700, then we're very likely to head back to 2630, maybe even back to 2571. And then we have to start looking at the daily chart for the next levels. And look, we've got a big area here. 2482 is that late July low bounce, and that is just above 2451, which is a 38.2% Fibonacci level of the rally we've seen since that low back in March, down 1434. So that's how that one's setting up. And again, if we're talking double tops, we can start talking about potential double tops on this one now. If it breaks 2482, then yes, we get a double top sell signal. And actually the measured move for that is right down here at 1877, which is really interesting because there's a gap there at 1890. So there would be a couple of reasons to be highlighting that if and when we got right down there. few other support levels to worry about before we get down there. And even if we got the double top sell signal by breaking 2482, we've still got this Fibonacci level at 2451. So for me, that's a really strong zone of support and a key battleground if we were to see further weakness in this one. So hopefully everything I just said made some semblance of sense to you, and hopefully if anyone's got any questions, quickly stick them in the chat and I will try and answer them. But I don't want to drag this on for too long because we've all got better things to do, I'm sure. Thank you very much for listening. If you're an existing client, got any questions, as always, please do ask. Drop me an email. Ask me anything you need. I want people to get the most out of the reports and understand them the best they can. And if you are not a client, as I said at the start of this, why not? And come and get a trial. Come and have a look at what it's all about. There's the link at the bottom. futurestechs.co.uk/energy gives you can give you some background on the product, and you can set up a trial if that's your if you wish. Thank you very much for listening. Have a good day, everybody. Take care of yourselves. Cheers, guys. Bye.